What do you think about the Nasdaq's big outperformance when it comes to the Dow and those other blue chip stocks?
Well, the narrowing breadth is something I expect to continue as investors have sought safe haven in some of those tech stocks. And not to dismiss that there's a powerful secular tailwind here with AI, but at the end of the day, we have to start questioning how stretched is valuation. And I think we'll start to do that. We're starting to see the market start to recognize, or at least acknowledge, that there is a possibility that this debt ceiling debate or a conundrum, whatever you want to call it, doesn't end well. I'm still hopeful that we have a 2011 type resolution, which, as you know, Frank, I've identified as our best case scenario.
You know, I think a lot of people call it a crisis, Greg. A lot of people are worried about the impact on not only the U.S. economy, but the global economy. With all that uncertainty in mind, I want to ask you, what is your WEX word of the day?
So my WEX word of the day is capitulation, Frank. We are seeing the capitulation that we would expect, if I'm right with my outlook, take place. In September 2011, we saw the markets trade off about 20% in the 2.5 weeks before the X date. I think we should expect something similar here. The difference here is that in 2011, I think the expectation was that both sides did not want a default, that it was to be avoided at all costs, and knowing that that was the other side's position, we could have comfort that a deal would be reached. I don't think we have that luxury here, particularly with the de facto head of the Republican Party, or at least the loudest voice, not only saying that this would be an unfortunate, avoidable or unavoidable situation, but actually saying it as an end to be aimed for, that it would be understandable, that it would be rational. And as long as one of the loudest voices is talking about it in those terms, we have to assign some probability that we will see some type of default.
I mean, absolutely. I think everybody has to do something with a possible default in mind. So I want to talk to you about what you're doing, or at least advising your clients to do when it comes to portfolio protection.
So if that is a possibility, which I think we largely thought it wasn't in 2011, then our best case scenario, again, is a 20% decline in the markets. And if that's what you're expecting, then the safe haven is not necessarily tech, because I think all the markets will be affected somewhat equally. They'll probably be more resilient than everything else, as they've been the last few months. But the safe haven here is short duration fixed income. And it's important that it's short duration, because I do believe that it won't be a long duration pullback. I believe it will provide an opportunity probably late in the year as consensus rationalizes what 2024 looks like. With 245 projected for the S&P right now, I don't think consensus is anticipating the slowdown that will probably be caused by Fed action.